This video is for the investors that are ready to buy on the dip. Here are 3 high-yielding small banks that will allow you to do just that. Let's get started. All right, Thomas, results from the big banks have sent ripples through the financial sector, leaving it on the edge of a much anticipated correction. But there's a twist. This isn't a tale of doom and gloom. Instead, it's a story of a sector that's brimming with strength, and it's been somewhat overlooked. A market priced with optimism and the promise of a much needed reset. So let's start by kind of addressing the broader financial sector and its recent developments here. Can you elaborate on this correction for us and what the key takeaways are regarding the overall health of businesses, consumer resilience, and cash flow?
Yeah, there was kind of some mixed results from bank to bank and from segment to segment, but there's kind of two themes I'm seeing in the bank earnings in general. And that is that higher interest rates are boosting their NII, their net investment income. We're paying more for our loans, so they're making more money. And the second is that the consumer is still resilient. We're sucking up the higher rates and we're paying for it, and we're still improving our spending. So right now it looks like things are okay. Ultimately, the rate outlook is driving this market as much as anything else. Higher for longer seems to be in play. I don't think we're going to see interest rate cuts until mid-year at the earliest. That means NII is going to be solid. When they do start cutting rates, then there'll be a tailwind from improved consumer and business demand. Right now, I mean, I start to worry if the consumer data started to get to deteriorate, or if the FOMC had to hike rates again. That could break another bank or two, but right now I just don't see that happening.
Okay, so let's focus on the smaller regional banks here. The FOMC is set to start cutting rates, so these banks may see some business acceleration by year end. So on Market Beat, Thomas, you had mentioned that Bank OZK, formerly Bank of the Ozarks, they're among one of the lower valued bank stocks, trading 8 times earnings, also among the most aggressive dividend growers. Can you tell us more about this one? Are these trends likely to continue?
Yeah, I mean, it looks that way. Bank OZK is certainly one of the lower valued regional banks. It's one of the best in breed regional banks that I can tell. It grew significantly in 2023, is expected to grow again in 2024. The cash flow was solid. It's got plenty of cash reserves building. Earnings were above forecast. Q4 is forecast to be the strongest month of the year. That's going to be underpinned by the decline in mortgage rates. Their loan business has really been picking up. Looking to next year, analysts are expecting revenue growth to slow to about 10%, which is down from this year. I think they could be underestimating it, but even at 10%, that's pretty solid, supports the capital return outlook. And talking about capital returns, when I say aggressive dividend growth, I mean, they're growing their dividend at a 12% compound annual growth rate, and they're making increases every quarter or every other quarter, which is it's a pretty good tailwind for the stock price, I would say.
For sure. Okay, so with that, analyst activity is important to consider here. How have analysts viewed Bank OZK stock, especially in light of the banking crisis that we saw early in 2023? And what is the current consensus?
Well, the analysts trimmed their targets due to the crisis, and that definitely had an impact on the share price. But the fear has subsided, and the analyst community remains supportive of the stock. We're at a firm hold, verging on moderate buy. Since the crisis has passed, they've begun to raise their targets, their price targets for the stock, and they're supporting the market at current levels. I don't see that changing anytime soon. Assuming that Q4 is strong like we expect and the 2024 outlook is affirmed, I would expect to see the analysts continue to raise their price targets and lead the market higher.
Okay, let's move on to Valley National Bancorp. What distinguishes this regional operator, and what can you tell us about its yield and maybe its stability outlook?
Well, to me, it's the yield and the stability outlook that distinguishes it. The payment is well covered at current levels, with earnings growth back in the picture. The analysts forecast a trough in the results this quarter with sequential improvements through the end of the year. That certainly supports the outlook for capital returns.
Okay, so analyst sentiment here seems to differ a little bit compared to Bank OZK. So if you would, can you elaborate a little bit on that? What's the change in sentiment, the consensus price target, and maybe the potential catalyst for this bank stock?
Well, the analysts are not as bullish on this stock as they are on Bank OZK, but they're still holding it. They see it trading at fair value right now. Um, so not a lot of upside potential, but I do see a catalyst in the outlook because we're looking at a trough in the results and we're looking at sequential and eventually a return to YOY improvements. I see the analysts starting to raise their targets and possibly their sentiment ratings by the end of the year.
Okay, so then there's Cadence Bank. What makes this company unique? How does this valuation and outlook compare to the others that we just discussed?
Well, Cadence Bank is another best in breed among the regional banks. It's an operator in the Southeast. It is among the highest valued banks in the sector, but it's worth the money because of the dividend and the stability outlook. The dividend is worth about 3.4% with the shares near a 1-year high, and it's pretty reliable at 35% of earnings. I'm looking at distribution growth to continue this year. It's supported by an expectation for earnings growth. Um, the earnings outlook did take a turn last year because Cadence divested one of its segments, the insurance segment.
Mhm.
So this year, revenue is probably going to decline, but that divestiture is going to help widen the margin. Earnings will still grow. The balance sheet's also been improved and it's set up to make any acquisitions or invest in growth. So I definitely see that as a bullish catalyst.
Okay, so analysts are expecting a turnaround for Cadence Bank. What are the expectations for the upcoming Q4 results and their consensus buy rating?
Well, like I said, the analysts are expecting to see some weakness in Q4, and the outlook for 2024 is a little mixed. But this isn't a red flag. The divestiture is a great thing for this company. Margins are going to improve. That's fantastic for the cash flow and capital return outlook. As far as like analysts, the trend analyst sentiment, the most recent estimate revision was issued this year, just a week or so ago, and it set the high price target for the stock. So I see that price target as being in play right now. It implies a 35% upside for the stock, which I think is a good reward.
Okay, let's bring this all together here. What are the key takeaways for investors that are interested in the financial sector and these regional banks?
Well, I think the key takeaways are that cash flow is solid, their finances are in good condition, a return to growth is expected for those that aren't growing, and capital returns will continue to flow.
All right, well, that wraps up today's discussion on these high yielding small banks. As we've heard, the financial sector is showing strength despite recent developments, and these regional banks offer interesting opportunities that we'll be keeping an eye on right here at MarketBeat. So stay tuned for new videos. Thanks, Thomas.